Our business life and tax savings tips. My tip for you guys is why you should not invest your money in the bank. But before that, I forgot to put the shared screen. There you go. Let me share this. All right. So why you should not put your money in the bank? Again, I have to. There are three reasons why. Because number one, when you put too much money in the bank, it actually triggers a spending habit. All right. So there, number one, because when you see a lot of money in the bank, there's a tendency for you to spend. So therefore, when you have that, it's psychology. When you have the tendency to spend, then it minimizes your opportunity to save money. Like I know there are so many people that spend money whenever they've been paycheck to paycheck. I'm trying to fix this thing. Okay, so share. All right, there you go. Then I fix this. Okay, and then make this bigger because this is I'm doing this live before I start my routine for today. All right, so that's why going back to what I'm saying, it increases your spending habits because the more money that you see in the bank, whether it's 50,000, 80,000, you have the tendency to buy things that you don't need. Maybe buying a new car, new clothes, new shoes, new any luxury items that you don't need. Remember, any of these items might not be a good investment. Number two, interest money that any interest in the bank is taxable at the end of the year, whether it's $30, 45, 55, it's being taxed by Uncle Sam. And then number three, it minimizes or limit your option to invest. We are creatures of habits. The more that we spend, the less that we invest. So that's why I know investment sounds taboo for other people that living paycheck to paycheck because they want to have that kind of access. They want to have that kind of freedom in their money. Because when I spoke to my speaking engagement, a lot of people are scared of losing their money from the bank. That's why they keep it. But there are two things that you can use and try to use this with your personal or family budgeting. How would you make the most of your bank? Number one is know your emergency fund. For me, there are only three uses. There are only three uses. This is a step one, know the use of the bank. There are only three things that you can do in the bank. Number one is put your emergency fund. When we say emergency fund, these are at least the 3 to 6 months spending budget of the family. For example, if you're spending 5,000 per month, your emergency fund on the bank should be at least 15,000 to 30,000. So you just times 5,000 times 3 months, 5,000 times 6 months. Either ways, at least you have an emergency fund. Anything that you need the money, you can pull it from there. Number two, the other use of the bank is for your paycheck. Any monthly income goes there. So that's why you have this bank deposit the money from your job or from your business. And then number three, it is payment of the mortgage. There are some, especially for house payment, they don't allow credit card. For me, I'm a credit card guy because I'd like to accumulate points. But for mortgage payments for the car and then for the house, they don't allow credit cards. So that's why I'm using the bank for those three: for emergency fund, for your paycheck deposit, and then for your mortgage payment. But other than that, I don't see any more value because you need to think like how bank thinks. Have you noticed the biggest buildings in the US or even in the Philippines, anywhere, are the banks because they know where to invest the money. So after that, Christopher, what can we do? The second step, know your investment options. I know a lot of you are full time in the job. You've been rendering your time for money, but let your money grows in conservative to moderate risk portfolio. Some of them might be that has a tax sheltered benefit. It grows your money, but also not being taxed on that particular year. There are options. These are just random selections. I'm not promoting one or the other because it's not one size fits all. You need to talk to your financial planner or to your tax advisor which one will suit you. The first one, it could be those check the what do you call that, the CD, the certificate of deposits is one. Then another thing is those the 401k. You can maximize your 401k if your company offers matching options. I think it's 20,000 plus is the maximum in a year. Try to maximize. If you're not sure yet where to put the money, at least your company pays half of it. The other options would be annuities, mutual funds is also good. And then the other ones could be cash value life insurance. Try to explore more of those. And do not forget that real estate is also a good investment. Stocks, the investments are also good. We've been seeing a lot from Schwab. These are a company that I see a lot of clients investing here, and then also Robinhood, they're putting their money there because the tendency is your money can grow and then work for you, and then it can earn more. So it's preparation for your future needs. From 10 to 15 years from now, you decided to have your own business, you decided to retire, you have this money that will help you to pay those bills when you started to retire. Because at the end, the formula of financial planning is income minus investment equals expenses. Okay, so income minus investment equals expenses. All right, so that would be all. I hope you learned something today. If you learn, please share and subscribe on my YouTube channel, Chris Y Coco. Thank you guys for watching, and I'm going back to work.